Welcome to Markets Now. I'm Michelle. We're with Dan Bossy of Ag Resource Company, and we did see higher livestock futures in the grain, soybeans higher, but feed grains lower. And Dan, let's start off talking about the corn market. The pullback here, was that all about this fast planting pace? Or their ideas, we're going to add some acres here?
Yeah, I think it's a little bit of both, Michelle. I think as you look at corn seedings being 12%, a little bit above the 5-year average, and then having the EU weather model in particular go drier, it gave us this idea of having windows of opportunity. And those windows are in the key areas, the Dakotas, Eastern Corn Belt, and so areas that have been a little bit of wet. So as we think about planting pace, we think we'll be 25% plus planted on corn next week. That means that we're on pace to at least have a normal planting season. If May weather cooperates, we'll accelerate that. But when we have these kind of normal crop years in terms of planting, we tend to basically add acres. It's a historical trend. So that additional acreage add would be 800,000 acres, pushing us over 96 million. That means that yield will become less important as we look at the heart of the summer growing period, that pollination period in June and July.
And that is going to push us well above that 2 billion bushel mark for ending stocks for new crop too, isn't it?
It is. I'm using 2.2 billion bushels today. I'm only doing that because I'm trimming my export estimate. This year for analysts, it's a moving target, both on weather and export. So as trades information starts to come forward, we'll make additional adjustments. But I think it's hard to do more than a 2.3 billion bushel U.S. corn export estimate for 25-26 today.
Yeah. How much competition are we going to get from Brazil? Because it looks like their second crop, safrinha corn, is in pretty good shape.
Yeah, my Brazilian office is telling me that have they been out in fields, it's a very strong crop. We're thinking 128 or 130 relative to USDA's 122 million metric tons. So the Brazilians will be very active in the world market here very soon. Not only that, we also have our friends in Argentina that have a very good corn crop. And because of a change in the tax structure at the end of June, we think Argentina will be an aggressive exporter of corn in that May-June timeframe. So Brazil comes on at the end of June and July. Before that, Argentina. So our window of opportunity to get U.S. corn exports is narrowing rather quickly.
Right. We did see a 2% drop in winter wheat crop ratings, but the wheat market's still down. So was that all about the weather forecast coming up?
It was the rain in the plains, which we've now been talking about for a week. Also, the weakness in corn. But I think if you stand back from the wheat market, it's maybe not a place to be overly bearish here. We've got the Black Sea still holding, or Russian prices are still holding at 148 or 150. We've got dryness issues across Ukraine and Southwest Russia. And then I've got a developing drought in the Chinese winter wheat areas. I'm not sure what that would mean to Chinese world wheat demand in the year ahead, but in the last year, we saw China buy about 11 million metric tons less. If they do have a crop problem, it's going to be important. But again, where and who from who, it's not going to be the United States will be the key.
Yeah, and the funds are pretty short here. If they get caught flat-footed, could that produce a pretty good rally or not?
Oh, Michelle, if I add up all four world futures exchanges, Paris, Kansas City, Minneapolis, Chicago, it's about 452,000 contracts of net shorts in wheat. So it's a massive short position. Obviously, the door wouldn't be big enough, but we're not there yet. But I need that fundamental spark to get those funds to move. And we'll see if it comes forward relative to these two weather problems that I mentioned.
Gotcha. Soybeans higher by themselves. So did we just bounce off of some support there? Was it technically driven, or is this the Brazil basis levels pulling our market up with it?
A little bit of each, and the Brazilian basis levels continue to strengthen as China is buying almost every bean that Brazil makes available to them, now buying all the way out to the end of summer and early autumn. I believe anyway that China's goal is to buy Brazilian beans no matter what the cost, and so they can't afford to leave those that get beyond them if this trade war persists, because they're probably not going to buy from the United States in that October, November, December timeframe. With that in mind, look for that Brazilian export program to be extended. And that's pushing non-Chinese business to the United States, most importantly for July, August, and September. So I'm raising my old crop soybean export estimate by 40 million bushels to 1865. That tightens end stocks and gives the old crop market a little more bullishness, if you will, though I worry a lot about the new crop not having Chinese there and where to put an export number.
Yeah, I was going to say, what does USDA do with their first export estimate in the May WASDE with that in mind?
Well, they have it at 1.86 billion bushels, very close to the old crop year. I think that's way too high. We're at 1650, or down about 200 plus million bushels from WASDE in their outlook for them estimate. And I always say that because of China. I just don't think the Chinese will be that aggressive a buyer. Now, we could always do a trade deal, but as of today, those trade deals seem to be a long ways off. But the problem in the soybean market is I not only have this moving question on yield, I really have a moving question in terms of soybean export demand. For now, I'll start out 200 million bushels less, but it could be more.
Right. So you mentioned trade deals are coming fairly slow. We see miles apart with China. Do you think we get any resolve with them?
I think someday the trade, it's not a trade war, it's a trade embargo. When you have tariffs at these levels, 145 or 125%, depending on whether it's US or China, it's an embargo. And so nothing is happening. I do think at some point that pressures leadership to do things. But when I looked at trade data from China through April 20th, they were still seeing a 10% increase over last year. So far, they've been able to sell goods to other destinations besides the United States. I think the pressure comes when China's trade starts to drop, and then we'll see if they start to, of course, look at the United States as coming with a hat in hand, if you will, to make an offer. But I still think that's several months down the road, and I'm not looking for a Chinese-U.S. trade deal of any size or substance till we look at maybe the end of the third or quarter, maybe the fourth quarter of this year.
Yeah. When you look at that, is that the only thing that we could see that could push us above these overhead resistance areas? We keep hitting our head on the 200-day moving average here in the soybean market.
Yeah, I do believe that nearby, unless it's a weather problem, a supply dislocation, or maybe a Chinese deal like a phase one, those are the only things that can push it to the upside, unless we're willing to admit that inflation is endemic and spreading everywhere. I don't think that's the case today. Something we'll watch, but those are the two main factors. So if you're going to be bullish, it's either on weather or a China deal. Today, I'd choose weather over China deal because I just think we're that far away, but we'll see what the growing season provides here around the world.
Yeah, it was a more risk-on day in the outside markets, which let's talk about money flow, because the funds were big buyers of corn and soybeans as of last Tuesday's Commitment of Traders report. Do they keep buying? Where's the money going here, do you think?
Well, I'm not seeing the inflationary push yet. And so from what we watch in terms of open interest, it's still not a wholesale, let's buy commodities because of inflation. Yeah, the gold market's been making new highs, reaching $3,500 an ounce, but it seems to be sporadic to where there's a story that, you know, the fund manager can invest in. I still think old crop corn is relatively tight. We're tightening up old crop beans, but I think as he gets beyond that, unless we have a weather problem, the story gets to be more bearish. So to me, it's going to be sporadic depending on where there's a story. Today, the story is in, like I said, in soybeans because of China buying Brazilian beans, but I don't think it's something that'll have a lot of runway. So let's think about another couple of weeks, and then seasonal trends will turn down and we'll get the funds back as sellers.
Cattle market closed higher along with the stock market. I know they're very hinged together. April live cattle hitting new contract highs. Is that market, do you think, poised to score new contract highs to go back up and test those areas?
You know, the cattle market's been trying to find a price that rations domestic beef demand, and we haven't found that price yet, even with talks of recession. So maybe the Chinese and them backing out of the beef market will be of help, but I still see a runway there too for bullishness as we look at tightening supplies heading into the fourth quarter. So if we see any setbacks in cattle, it'll be demand-based. It's always possible at some point we do get recessionary pressures in the United States relative to tariffs, but it's not today. Maybe a couple quarters down the road. So we'll see if that plays out, Michelle. But at the moment, cattle are still generally bullish, but we got to watch very carefully on this double top that's now forming on the charts.
Yeah, that's right. We've got to get through those areas, but this has been kind of a cash-led rally. And so we were up last week on the cash. If we can keep that market going, is that the one thing that could push us through those areas?
It is. Cash has got to be the leader here, and we do believe that there's a chance cash will be higher. We tend to form a cash peak somewhere right after Mother's Day. So my antenna would be up in terms of a top in that time frame. As seasonally, then beef demand starts to drop as temperatures warm across the central and much of the United States. But we'll see how that all plays out. Today, there's just no rationing in beef demand, and I think that's the key to why the cattle market keeps, moving higher even after recent corrections.
Very good. Milk market, we have at least recovered off the April lows, but how much more upside potential do you think there is?
There may be potential of 19 or 19 and a half dollars on milk, but I need to find countries that will replace Chinese demand. And so far, we've been not able to do that. So I can be bullish of milk longer term based on stagnant supplies and production in places like the EU or Oceania. The U.S. was set to be in a bull market, but then this, of course, trade bump came with the tariffs with China. And I now think the milk market needs to consolidate here and figure out which countries are going to step up their demand to replace China. If they do that, and we can see, butter working or butter fats working in other places in the world, I can get bullish of milk just on a supply basis in this country because our dairy numbers are not rising and production per cow is stagnating. So key in the world again is demand, and we're just waiting to see who is that replacement for China longer term.
Excellent. Thanks so much for your analysis. As always, Dan Bassi with Ag Resource Company, and that's Markets Now.